All right, let's just jump right into it. Palantir. Is it a once-in-a-generation AI company busy building an unbreakable monopoly, or is it just the most dangerously overvalued stock on the entire market? Today, we are breaking down what is arguably the single most polarizing company for investors right now.
And to really get to the bottom of this, we're going to be digging into a deep dive analysis from the research team over at fffinstill. They've already done the heavy lifting and crunched all the numbers, so let's unpack what they found.
So here's the game plan. We'll start with exactly why this stock is so divisive, what the big fight is all about. Then we'll cover its crazy transformation, lay out the bull case, then the bear case, before finally landing on fffinstill's official verdict.
First up, let's understand the battleground itself, because Palantir isn't just a stock ticker, it's a full-blown argument about the future of AI and what that future is actually worth.
This quote from fffinstill just nails the two extremes perfectly. On one side, you have the bears looking at a valuation that seems, well, kind of insane. 216 times earnings? That's not just pricing in success, that's pricing in absolute perfection. But then, on the other side, you've got the bulls, who believe Palantir is so unique, so far ahead of the curve, that those normal valuation rules, they just don't apply here.
So, how did we even get to this point? Well, for the better part of 2 decades, Palantir was the super-secretive government contractor. Yeah, they were famous for working with the CIA, but they were also infamous for just burning through cash. Then, boom, AI explodes onto the scene, and suddenly, that incredibly complex data infrastructure they've been building, it became the exact thing the world's biggest companies were absolutely desperate to get their hands on.
And this chart right here, this is what fffinstill calls the inflection year. Just look at that acceleration. Going from 17% growth to a projected blistering 56% in just 2 years, this is the exact moment Wall Street had to stop thinking of Palantir as some government consultant and start seeing it for what it was becoming, a true high-growth software giant.
But how did they do it? Well, it all comes down to this idea that fffinstill calls the ontology moat. The best way to think about it is like digital plumbing. It's the messy, complex system that connects every single piece of a company's data. It's not the flashy AI model itself, but it's the deep infrastructure that lets AI answer real hard questions. And fffinstill's whole argument is that this 20-year head start is nearly impossible for anyone else to replicate.
Okay, so let's build on that. The bull case for Palantir, at least according to fffinstill's analysis, really stands on 3 core pillars.
First, there's that irreplaceable moat we just talked about. Once a huge company builds its entire operation on Palantir's ontology, trying to rip it out is, well, it's almost unthinkable. Second, there's the big shift to their artificial intelligence platform, or AIP. This lets customers get up and running in days, not months. It scales like real software. And third, you've got this massive multi-year tailwind from government AI spending, a space where Palantir is already the trusted go-to player.
But of course, for every passionate bull, there's an equally convinced bear. So let's flip the coin and look at the other side of this argument, which fffinstill highlights with 3 pretty glaring red flags. The first red flag is just the price. Simple as that. A price-to-earnings ratio over 216. To put that in perspective, you'd have to wait over 200 years to earn back your investment from profits alone. That means the market isn't just pricing in success, it's pricing in absolute flawless perfection for a decade or more. Any little slip-up and this whole valuation could just collapse under its own weight. Second, and this one's a big one, check out the insiders. In the 90 days before this analysis, insiders sold $430 million worth of stock. And get this, there was 0 buys, not a single one. Even co-founder Peter Thiel sold a massive chunk of his shares. When the people who know the company best are selling that aggressively, that's a signal that's pretty tough to ignore. And the third red flag is dilution. See, Palantir pays its employees very heavily with stock. And because of that, the total number of shares out there has gone up by 7% over the last 2 years. The pizza analogy works best here. Even if the pizza itself gets a little bigger, if they keep cutting more and more slices, your slice just keeps getting smaller. Your piece of the company is constantly being diluted. Okay, so we have a phenomenal business with a really powerful moat going head-to-head with a terrifying valuation and some pretty concerning insider signals. So how do you resolve this? Well, this brings us to the final verdict from fffinstill's analysis. So fffinstill approaches this by weighing the probabilities, which I think is pretty smart. They see a 1 in 4 chance of the bull case, a total home run, where AIP drives explosive growth and the stock shoots to $250. But there's an equal 1 in 4 chance of the bear case, where growth just stalls and the price could tumble all the way down to 75. Their most likely scenario, with a 50% probability, is the base case. Growth slows down a bit, but it's still strong, landing the stock somewhere around $165.
And all of that brings us to pffinstill's final rating, a hold. And their summary here just perfectly captures the conflict, doesn't it? The business itself is phenomenal, a real leader with a moat that's getting wider. But the price you have to pay for that business is so incredibly high that the margin for error is razor thin. The risk and the reward are almost perfectly balanced right now.
So this leaves us with the ultimate question that pffinstill poses in their research. Is Palantir one of those incredibly rare companies that can actually defy gravity, that can grow into its massive valuation through just sheer undeniable excellence? Or is the price right now a bubble, one that's just destined to pop when all the hype finally meets the cold, hard reality of the market?
This entire breakdown was based on the fantastic research from the team at pffinstill. If you enjoyed this kind of deep dive, make sure you follow our channel so you don't miss the next one. And if you want to keep learning, seriously, head over to the pffinstill site. They have over 300 free learning concepts on there to help you become a smarter, more informed investor. Thanks for watching.